Our next guest says she's now starting to put cash to work as fixed income is becoming a real option. Let's bring in Laila Pence, president of Pence Wealth Management. Laila, good to have you with us. With these market moves, a lot of volatility and uncertainty out there. Are investors positioned a little bit conservatively at this point? Where do you see the opportunities amidst this change?
Fixed income market, and for the last 15 years, we couldn't get any interest, any earnings on the fixed side of the portfolio. Now, for the very first time, we don't have to be as aggressive with the portfolio allocations. We can allocate more into fixed income. You can get 2-year treasuries and just regular fixed income at much higher rates than we've seen in the last 15 years. We also like regional banks. We think those are areas where they can benefit from the net interest income with the rising interest rates. And we like the regionals as opposed to foreign banks or even the larger banks because they don't have exposure to international and credit risk.
To your point, this chart on the Bloomberg 3812 for our investors, they can actually see how rising global yields are offering now fixed income yields at multi-year highs. But let me bring it back to what's happening not only in the markets, but and away from the Fed, perhaps a little bit more politically, because we, of course, just wrapped up the Party Congress in China. And now we're headed towards the U.S. midterm elections as well. What opportunities does this bring?
Well, historically, for the last 20 years, looking at the midterm elections, last 20 years in a row, after the midterm election, basically the market has gone up within the next 6 months, an average of 8% return. Obviously, that's no indication that it'll do this time, but we have to rely somewhat on history. And that's because the market really likes gridlock and even if it doesn't have gridlock, even if one party dominates, it just takes one uncertainty out of the markets, which the market likes. So once we get past the midterm election, we do think that the market will have a little bit of recovery here, potentially by year end.
Post the midterms, are there any new themes or policies that you think perhaps your portfolio can be aligned with?
Primarily, really looking at things that will benefit from inflation. We do see inflation basically staying at these levels for a little bit longer. But then next year, we do see inflation starting to moderate. But there'll still be a lot more inflation than we've had in the past. It's going to be quite a while before we get to the 2%. So we look at payment companies that can benefit from inflation. We look at discount retailers, which still more and more shoppers are going to go to discount retailers just because of the high cost of goods. So there is a lot of opportunities in areas that will benefit from inflation, which we're looking at.
What does that tell you about the gap between the middle income consumer and the low income consumer in this inflationary environment?
Yeah, there's definitely a big gap in terms of the low-income producer really are going to go, income consumer will go primarily to these retailers. Whereas the high-income, we find that the high luxury goods is an area we also look at because the higher-income individuals you still have the lions at the high-end stores, which is an area also we focus in.
Laila, before we let you go, of course, there's a big earnings season getting started. We have tech results this week. This chart on the Bloomberg showing how it was a really ugly day, a really ugly year for Chinese tech. U.S. tech hasn't done that much better. Do you see any opportunities with this sell-off?
It's really, there's so much more risk in the Chinese market than the U.S. market. We have a down market already in the U.S., so we kind of feel that there's a lot less risk in the U.S. and there's just as much upside. We're certainly staying away from the Chinese markets right now just because, as you know, the political scene is not very favorable to the Chinese market. So unfortunately, until we see better directions from the Chinese government, we're staying away from that.
Laila, always great to have you with us. Laila Pence, president of Pence Wealth Management. And you can get that roundup of the stories you need to know to get your day going in today's edition of